Breaking news for every Social Security, SSI, and SSDI recipient watching this video right now. President Trump has just announced 4 major changes to Social Security that are already beginning to take effect. And if you're receiving benefits, these changes will impact your payments, your eligibility, and how you plan your financial future. This is not a rumor. This is not speculation. These are official policy shifts that millions of seniors, disabled Americans, and SSI recipients need to understand immediately. If you rely on Social Security income to pay your rent, buy groceries, or cover medical bills, the next few minutes could be the most important information you hear all month. So stay with me. Don't skip ahead, because by the end of this video, you'll know exactly what's changing, when it's happening, and what you need to do to protect yourself. Let's get into it. Welcome back to the channel. If you're new here, this is your trusted source for Social Security updates, SSI payment schedules, SSDI news, and everything you need to stay informed and protected. We don't do clickbait. We don't waste your time. We give you the facts, the dates, and the action steps so you can make smart decisions about your benefits. And right now, with a new administration making sweeping changes to federal programs, it's more important than ever to stay ahead of the curve. So if you haven't already, hit that subscribe button and turn on notifications, because when Social Security changes, you'll be the first to know. And that peace of mind, that's priceless. Now let's talk about these 4 big changes that President Trump is rolling out starting now. Change number 1, stricter work requirements for SSDI recipients. The first major change involves work requirements for people receiving Social Security disability insurance, also known as SSDI. Under the new policy, the Social Security Administration is tightening the rules around what qualifies as a disability and how much work activity is allowed while receiving benefits. Here's what's happening. Right now, if you're on SSDI, you're allowed to earn up to a certain amount per month without losing your benefits. That amount is called the Substantial Gainful Activity Limit, or SGA. For 2025, that limit is $1,620 per month for non-blind individuals. But under the new Trump administration guidelines, the SSA is increasing scrutiny on SSDI recipients who are working part-time or doing any kind of paid activity. They're conducting more continuing disability reviews, or CDRS. These are the reviews where Social Security checks to see if you're still disabled and still eligible for benefits. And here's the kicker. These reviews are happening more frequently, and they're being conducted with a stricter lens. What does that mean for you? It means if you're on SSDI and you're doing any kind of work, even gig work, freelance work, or occasional jobs, you need to be very careful, because if Social Security determines that you're earning too much or that your condition has improved, they can stop your payments. And once your payments stop, getting them back is a nightmare. So here's what you need to do. Keep detailed records of your income. Keep documentation of your medical condition. And if you get a notice about a CDR, respond immediately. Don't ignore it. Don't put it off, because silence can cost you your benefits. Change number 2, cuts to SSI eligibility and asset limits. The second big change affects Supplemental Security Income, or SSI. SSI is the program that helps low-income seniors and disabled individuals who don't have enough work credits to qualify for regular Social Security. And right now, the Trump administration is pushing for stricter asset and income limits for SSI recipients. Here's how it works currently. To qualify for SSI, you can't have more than $2,000 in countable assets if you're single, or $3,000 if you're married. That includes things like bank accounts, stocks, and property. But the new policy is expanding what counts as an asset. Under the updated rules, more types of property, more types of savings accounts, and even certain vehicles may now count against your asset limit. That means if you've been carefully saving a little bit of money each month, or if you own a second vehicle, or if you have any kind of investment, you could suddenly be over the limit and lose your SSI. And losing SSI doesn't just mean losing your monthly payment. It can also mean losing your Medicaid coverage, because in most states, SSI eligibility automatically qualifies you for Medicaid. So losing SSI could mean losing your health insurance too. This is serious, and here's the real-world impact. Imagine you're a 68-year-old widow receiving $943 a month in SSI. You've been saving $50 a month for emergencies. After a year, you've got $600 in the bank. Then your son helps you out with a $1,500 gift for your birthday. Suddenly, you're at $2,100. You're over the asset limit. and Social Security flags your account. Next thing you know, your SSI is suspended, your Medicaid is gone, and you're scrambling to figure out what happened. This is why you need to understand the new rules. So here's my advice. If you're on SSI, talk to a benefits counselor, check your asset levels, and be very, very careful about accepting large gifts or deposits, because even temporary spikes in your bank account can trigger a review. And if you're close to the limit, consider spending down on necessities before you hit the threshold. Buy groceries, pay bills, stock up on essentials. Just don't let your assets sit above that limit. Change number 3, Social Security, COLA freezes, and benefit adjustments. Now let's talk about the cost of living adjustment, or COLA. Every year, Social Security recipients get a COLA increase to help their benefits keep up with inflation. In 2025, that increase was 2.5%. But the Trump administration is now proposing a new formula for calculating COLA, and this new formula could mean smaller increases in the future, or in some years, no increase at all. Here's why this matters. Right now, COLA is based on the Consumer Price Index for urban wage earners and clerical workers, or CPIW. It measures the cost of things like food, gas, and housing. But the Trump administration is pushing for a different index called the chained CPI. This index assumes that when prices go up, people switch to cheaper alternatives. For example, if the price of beef goes up, the chained CPI assumes you'll just buy chicken instead. So the inflation rate appears lower. And if inflation appears lower, your COLA increase is smaller. Over time, this adds up. Let's say you're receiving $1,800 a month in Social Security. With the current COLA formula, you might get a $45 increase next year. But with the chained CPI, that increase might only be $30. That's $15 less per month, $180 less per year. And over a decade, that's nearly $2,000 in lost benefits. For someone living on a fixed income, that's a huge difference. And here's the thing. Seniors don't spend like the average worker. You spend more on healthcare, prescription drugs, and housing. And those costs are rising faster than the general inflation rate. So a smaller COLA doesn't just mean less money. It means your purchasing power is shrinking every single year. What can you do about it? Honestly, not much. This is a policy decision that's happening at the federal level. But what you can do is plan for it. Don't count on big COLA increases to bail you out. Budget based on your current income, cut unnecessary expenses, and look for ways to reduce your fixed costs, like housing or utilities. Because if COLA freezes or slows down, you need to be ready. Change number 4, increased scrutiny on Social Security fraud and overpayments. The fourth and final change is all about enforcement. The Trump administration is ramping up efforts to crack down on Social Security fraud and overpayments. Now, don't get me wrong. Fighting fraud is a good thing, but the problem is the SSA's definition of fraud is getting broader, and innocent people are getting caught in the crossfire. Here's what's happening. Social Security is using new algorithms and data matching systems to detect discrepancies in recipient accounts. They're cross-checking your reported income with IRS records, state databases, and even bank records. And if they find any mismatch, even a small one, they can flag your account for an overpayment. What's an overpayment? It's when Social Security claims they paid you too much. And when that happens, they want their money back. Sometimes it's a legitimate mistake. Maybe you forgot to report a small pension, or you didn't know you were supposed to report a one-time payment. But sometimes it's Social Security's mistake. And guess what? You still have to pay it back. And the SSA can be ruthless about collecting. They can withhold your entire monthly benefit until the overpayment is recovered. They can garnish your tax refund. They can even take money from your spouse's Social Security if you're married. And here's the worst part. These overpayment notices can go back years. You might get a letter today saying you owe $10,000 for an overpayment that happened in 2020. And if you don't respond within 30 days, they'll start taking your benefits. So here's what you need to do. First, always report your income accurately, even small amounts, even one-time payments. Report everything. Second, keep copies of every document you send to Social Security, every letter, every form, every piece of correspondence, because if they claim you didn't report something, you need proof that you did. Third, if you get an overpayment notice, don't panic. You have options. You can request a waiver if the overpayment wasn't your fault. You can request a payment plan if you can't afford to pay it back all at once, or you can appeal the decision if you believe it's wrong. But you have to act fast, because once that 30-day window closes, your options are limited. Now, I want to take a moment to talk directly to you. These 4 changes are real. They're happening now, and they're going to affect millions of Social Security, SSI, and SSDI recipients across the country. But here's the thing. You don't have to be a victim of these changes. You can be prepared. Here's what I want you to do. First, review your Social Security statement. Make sure all your information is up to date. Check your earnings record. Check your reported income. Make sure everything is accurate. Second, keep detailed records. Save every letter, every notice, every form. Keep copies of your bank statements, your medical records, and your income documentation. Because if Social Security comes knocking, you need to be ready. Third, stay informed. Don't rely on rumors or Facebook posts. Get your information from trusted sources like this channel. Fourth, if you're on SSI, watch your asset levels. Don't let gifts or savings push you over the limit. And if you're close, spend down on necessities before you cross that threshold. Fifth, if you're on SSDI, be very careful about working. Keep track of your income. Stay under the SGA limit and respond immediately to any CDR notices. And finally, plan for smaller COLA increases. Don't count on big raises to keep up with inflation. Budget conservatively, cut unnecessary expenses, and build a small emergency fund if you can, because the Social Security landscape is changing, and the people who survive these changes are the ones who see them coming. Look, I know this is a lot to take in, and I know it can feel overwhelming, but that's exactly why this channel exists. We're here to break down the complicated stuff, to give you the facts, to help you understand what's happening with your benefits, and to give you the tools you need to protect yourself. Because your Social Security income isn't just a check, it's your livelihood, it's your security, it's how you keep a roof over your head and food on the table, and you deserve to have clarity, you deserve to have peace of mind, and you deserve to have someone in your corner who's looking out for you. So if you found this video helpful, do me a favor. Hit that subscribe button, turn on notifications, and share this video with someone you know who's on Social Security, SSI, or SSDI, because the more people who understand these changes, the better off we all are. And if you have questions, drop them in the comments below. I read every single one, and I'll do my best to answer them or cover them in a future video, because we're in this together. All right, let's wrap this up. President Trump has announced 4 major changes to Social Security that are starting right now. Number 1, stricter work requirements and more frequent reviews for SSDI recipients. Number 2, tighter asset limits and expanded definitions for SSI eligibility. Number 3, a new COLA formula that could mean smaller benefit increases in the future. And number 4, increased enforcement on overpayments and fraud detection. These changes are real, they're happening, and they're going to impact your benefits. But now you know what's coming, you know what to watch for, and you know what steps to take to protect yourself. So take a deep breath. You've got this. Stay informed, stay prepared, and stay protected. I'll see you in the next video.